In this video, we'll talk about single candlestick patterns. I'll list you popular single candlestick patterns that are mostly used. Bullish Marabozu, bearish Marabozu, hammer, shooting star, doji. So in this video, we'll talk about these 5 single candlestick patterns. Now first is bullish Marabozu pattern. It is used to see the strength in bullish momentum. It's basically a long green or white candle with bare minimum or no shadow at all, neither the upper shadow nor the lower shadow. The low is almost equal to open and the high is almost equal to close. It obviously represents a good strength, a strong sign of bullishness. This simply means that bulls were very strong enough to beat the bears throughout the time frame, right from the start of the candle till the end. So if it's a daily time frame candlestick, the bulls were strong throughout the day. The bears struggled to resist the bulls. The second is bearish Marabozu pattern. Now this one is just the opposite of bullish Marabozu. It is used to see the weakness or strong bearish move. It's a long red or black candle with bare minimum or no shadow at all. Again, neither the upper shadow nor the lower shadow. The high is almost equal to open and the low is almost equal to close. This one represents a good bearish strength. Simply stating, the bears were strong enough to generate the momentum to beat the bulls throughout the time frame, right from the start till the end, till the closing of the candlesticks. So again, if it's a daily time frame candlestick, the bears had a strong momentum throughout the day. The third is hammer pattern. This candle has a really small body with just a little or no upper shadow and a long, significant lower shadow. The significance of this candle is found more when it is formed at the bottom of the downtrend, at the support level or zone, signifying a strong sign of bullish reversal. It doesn't have to have a definite size, but it is said that the lower shadow should be at least twice the size of real body. Then it is considered a hammer candlestick. Again, the color of candle doesn't really matter because it shows that initially the bears were strong to drop the price of the stock, but before closing of the candle, bulls recovered and had a good run before closing of the candle, which is a sign of bullish reversal. Let's say we have a hammer candle in the daily time frame. That means in the first half, the bears were winning over the bulls, but before the day end, we can see that in second half the bulls recovered. So it doesn't matter if the candle that is closed is a green or red candle because it has a really small body. It just signifies that the bulls generated enough momentum to recover the price before the closing of the candle. Shooting star pattern. Now, this is completely opposite of the hammer candle. It is bearish reversal signal. This candle again has a really small body with just a little or no lower shadow this time and a significant upper shadow. Now, the significance of this candle is more when it is formed at the top of the uptrend, at the resistance level or zone, signifying a strong sign of bearish reversal. It doesn't have to have a definite size, but it is again said that the upper shadow should be at least twice the size of the real body. Then it is considered a shooting star candlestick. Color of the candle again doesn't matter because it shows that initially the bulls were strong to rise the stock price, but before the closing of the candle, bears recovered and had a good run before closing of the candle, which is a sign of bearish reversal. Let's say we have a shooting star candle in daily time frame. That means in the first half, the bulls were winning over the bears, but before the day end, before the closing of the candle, bears recovered and they dropped the price. So it doesn't matter if the candle closed as green or a red candle because again it has a really small body. It just signifies that the bear generated enough momentum and managed to drop the price before closing of the candle. Now next is doji. Now doji candle is formed when the opening and the closing of the candle is more or less the same. The length of the upper and lower shadows can vary. It's an indecisive candle, which means there's an equal fight between buyers and sellers, creating confusion around the price movement. It can be taken as a warning sign of reversal in an ongoing trend. Let's say there's an ongoing uptrend and a doji is formed at the top of the trend. That means now the bears are also active. And so there's a chance of bearish reversal at this point of time. Depending upon the length of the shadows, there can be different type of dojis that can be derived into various categories like standard doji, long leg doji, dragonfly, or gravestone doji. So we're not going to dive any further into types of doji in this video. Maybe later in some other videos. So in this video, we'll keep it short and simple about single candlestick patterns. This is it for the video. Thanks for watching.